If you are new to the Forex market and you want to learn a strategy that will help you make money. You've heard about pivot point trading and you're interested in learning more, but you're not sure where to start. Don't worry, we're here to help. In this video, we'll show you the best Forex pivot point strategy for beginners. We'll explain what pivot points are and how they can be used to your advantage. So let's get started. The first thing you need to know about pivot points is that they're technical indicators that are used to identify potential support and resistance levels. Pivot points are calculated using the high, low, and close prices of the previous day's trading session. The main pivot point is the central point of support and resistance and is calculated by adding the day's high, low, and close prices and then dividing by 3. The two levels of support and resistance below and above the main pivot point are known as the first and second levels of support and resistance. The third level of support and resistance is located halfway between the main pivot point and the first or second levels of support and resistance. Now that you know how to calculate pivot points, let's take a look at how you can use them to your advantage. If you are a swing trader, you can catch major reversals in the market and take advantage of them if you follow this chart setup. 2-3 days of uptrend, followed by the next day's open high between R1-R2 pivot levels, and reach below yesterday's low and close more than 60% above the previous day's low. 2-3 days of downtrend, followed by a price break below the previous day's low and bounce back and close more than 50% above the previous day's low. The most common way to trade pivot points is to look for a breakout above or below the main pivot point. If the market breaks above the main pivot point, it's considered bullish and you should look for buying opportunities. If the market breaks below the main pivot point, it's considered bearish and you should look for selling opportunities. Another way to trade pivot points is to look for reversals at the first or second levels of support and resistance. If the market reverses at the first level of support or resistance, it's considered a weak reversal and you should be cautious about taking a trade in that direction. If the market reverses at the second level of support or resistance, it's considered a strong reversal and you should look for a trade in that direction. You can also use pivot points to set stop-loss orders or take profit orders. A stop-loss order is an order that's placed to sell a security when it reaches a certain price. A take-profit order is an order that's placed to buy a security when it reaches a certain price. Now that you know how to trade pivot points, let's take a look at how to use our free pivot point calculator. To use the calculator, simply enter the symbol of the currency pair you're trading, the periodicity, and the high, low, and close prices from the previous day's trading session. Once you've entered that information, click Calculate, and you'll see the main pivot point, as well as the first, second, and third levels of support and resistance. You can then use those levels to place your orders or set your stop losses and take profits accordingly. That's all there is to it. If you like the video, please don't forget to like and subscribe. Thanks for watching.